Hello everyone, this is Dan Hussey from ElliotWaveForecast.com bringing you our chart of the day, which is the Dow Jones Real Estate Index and our ElliotWave analysis of it. So let's begin with, it's March 30th, 2015, and let's begin with the nature of this cycle. And what we're really getting down to is the fact that this has not really diverged at all from our major indices globally. In other words, the real estate market has been almost hand in hand with what we've seen in U.S. equity markets in terms of when we found tops, when we found bottoms, and of course when this whole market has turned and rallied subsequently together. The difference being the Dow Jones Real Estate Index is lagging many of our U.S. indices and many of the indices globally, and not having made all-time highs again yet, which is not shocking because the real estate market, obviously, it's a slow boat, right? And it's going to take time for it to recover, but the recovery has clearly already begun to happen, and we're seeing that through the indices and the representation of the real estate conglomerates out there. So what was very interesting is the 2007 real estate peak also correlated with our peaks in, of course, the stock market at the same time. So nobody really paid attention to the fact that it was a setup, or that we were really rallying into a very technical reversal level in an area where profit taking from this prior rally, should occur, and that's exactly what we saw happen. We were running into the 123.6 to 161.8 line of our W compared to Y measurement. Our black W is, or the black Y rather, is 123.6% of black W, a very technical reversal and target area for this prior rally. Needless to say, the market pulled back, and ever since then we've been in a pretty solid trend higher that has very closely shadowed U.S. equities. So we are expecting now, though, the Dow Jones U.S. Real Estate Index to continue its rally in the completion of this red W wave before finding a pullback in red X. But we are expecting it to trade up into the 100% area here, the 342 area to 123.6 area, the 380 area, excuse me, which is, of course, almost exactly the same area that we found peaks before, right? In order to determine the area, the probable area of the termination of red W, we need to determine its substructure here, and we're really watching a three-wave WXY pattern play out, and where W equals X is right up into the 342 area, which really takes you up into prior highs as well. So we are expecting this market to continue rallying up into the 340s before eventually getting a three-wave pullback into the X. We like being a buyer in the pullbacks for X, and of course a buyer for the move up into W, and we don't like selling this market against new highs or for the turn in the red X pullback. We prefer waiting for that dip and actually buying in three waves back if and when we get it. And there's all different areas that we will be taking a look at after we find, of course, this rally up into W, where we can position on a pullback in X. Of course, not that you can't be long for the W move. I'm just saying, that pullback in X is, of course, we all know that it's going to come eventually. So with that being said, this is, of course, a weekly and a monthly outlook on the Dow Jones Industrial Index, and I want to kind of bring everyone to the same picture here, that none of this will play out in the immediate near term. This is something and some analysis we're looking at that's going to take several weeks to play out. We're going to see a rally, we're going to see a pullback, and we're going to see plenty of oscillation inside of these areas. So with that being said, I will be back with you tomorrow, and as price action develops, take care of it.